Welcome back to the Tuesday Target Audio Edition. Issue 28 of 52 just dropped, and Yuri opens with an image I can't shake. Wall Street clapping like a trained seal.
Clapping for buybacks. His point is brutal when you sit with it. For a decade, tech giants shredded their own shares, built nothing, hired nobody, and the market cheered. Since 2000, buybacks supplied essentially all net demand for U.S. stocks.
And now the same companies, Microsoft, Meta, the whole gang, actually spend real money on real capacity. Data centers, chips, and the market punishes them like teenagers who maxed out dad's credit card.
Reward the shredders, flog the builders. Charming incentive system. That line alone is worth a subscription.
But here's where he takes it one level deeper than everyone else. The big banks, Goldman, Morgan Stanley, Bank of America, all of them, are now pitching those beaten-down spenders as the bold contrarian play.
All of them, at the same time. And Yuri just calmly asks, if every sales desk on the street endorses your contrarian idea, what exactly are you contrary to?
Consensus with better marketing.
And crowded lifeboats sink fastest. That's the title of the whole issue, basically.
The data backs him up in the body of the letter. Hedge funds sold U.S. equities 3 straight weeks, dumped tech for a fourth. Meanwhile, retail traded 65% above last year's pace, record inflows, cash levels at generational lows.
He sums it up in one sentence. The smart money handed its inventory to the enthusiastic money. Ouch.
Okay, the prairie dog. Explain the prairie dog because it carries the whole back half of the letter.
So picture the bond market as this anxious little prairie dog, standing up, scanning the horizon for danger. And what's it staring at? Last month's threat. An inflation print pumped up by wartime oil, and it's buying insurance against that, pricing in Fed hikes.
While the actual signal sits somewhere else entirely.
Wage growth. Yuri's point is that wages have led every inflation turn since 1985, and wages peaked 4 years ago. Real wages just dipped below zero. Payrolls came in at 57,000 against 114 expected.
So disinflation is loading in the background while the prairie dog insures against a shock that already happened.
Which flows straight into the trade of the week. And I love that the whole letter funnels into it. 20-plus year treasuries, TLT.
The prairie dog play. If the wage data is right and hike pricing gets forced out, long-end yields fall and TLT grinds higher. Defined risk, 3 months of runway. And apparently someone big agrees. A large buyer just scooped up treasury calls expiring right after the July 14th inflation report.
Quick tour of the rest. Japan, 20-year yields at a record. They were zero in 2019. And bankruptcies from the weak yen at all-time highs. Saudi Arabia cutting oil prices by $11 a barrel, biggest cut in 26 years.
And the new Fed chair, Warsh, bearing forward guidance itself. No more telegraphed policy paths. Yuri's take. Every FOMC date just became an event, and options should price it that way. Wednesday's minutes are the first look inside his regime.
Tactics for this tape, in his words, watch the rotation, swing trade semis only until volatility compresses, check the broadening, biotech, equal weight, beaten down software, and keep one eye on quiet commodities like silver. The AI build-out still runs on physical inputs.
The full letter has all of it, plus the trade details in the alerts section. Tuesday Target by Yuri von Randow at Macro Dozer.
Educational content only. And remember his sign-off. If you're only here for the money, look elsewhere.
Success requires dedication to the craft. See you next Tuesday.